Good morning. If you own rental property in Fairfax County or you are thinking about buying one, this video could save you from a very expensive mistake. Because right now, while everyone's focused on Northern Virginia hot market narratives, the actual data is telling a completely different story. Median sold price by zip code. Data provided by Bright MLS as of January 7, 2026. We see right here the county in a whole. In December 2024, the median sold price was $700,000. But in December 2025, the median sold price was $725,000. There is 3.6% increase of the median sold price. Now let me move a little bit to the median days on market for this zip codes. You can see right here, Fairfax County in December 2024 was 13 days. In December 2025 is 21 days. There is 61.5% more inventory in Fairfax County. So right here doesn't mean everything in the county days on market is 21 days, because if I sort this data in ascending way, I will find some places 10 days, some places 11 days, some places 12 days, and so on. I am Azam, licensed realtor in Virginia with a real broker in McLean. And for the next 10 minutes, I'm going to show you exactly which Fairfax County ZIPs have the best mix of appreciation, rent, and rental velocity in 2026 using real data analyzed from MLS from December 2025. So, what does this mean for you? Fairfax County is not a blanket appreciation market right now. It's a selective market. If you bought the wrong zip last year, you likely lost value. But if you bought the right zip, you could be sitting on 15 to 20%, even 55% gains. And that's what we are about to find out. Let's find out. Now, let's talk about zips that actually made money in 2025. So, this December 2025 data, for example, zip 22307 in Alexandria, right here. The zip code right here. 22307 Alexandria. In December 2024, it was $562,500. In December 2025, it went up to $963,500. So this is like 71.30% increase. This could be small sample size in December. Maybe one or two luxury sales skewed the median, but even if it's half accurate, still 35 to 40% appreciation in this zip. Now, the next zip is zip 22124 in Acton, Virginia. In December 2024, it was $740,000 right here. In December 2025, it went up to $1,057,500. This is 42.9% increase. Now, zip code number 3 is 22181 in Vienna, right here. Last December was $966,000 and went up to $1,250,000. This is 29.4% increase. The next zone is in zone 22079, 22079 in Lorton, Virginia. It was in December 2024, $667,450. And in December 2025, it went up to $818,745. It's almost 2270 to 22.7% appreciation right here. Now let's move to zip code 22003 in 22003 in Annandale, Virginia. Annandale, right here, Annandale, Virginia. It was in December 2024, 598,450, and it went up to $730,000 in December 2025. It's 22% increase. And then I have zip code in Alexandria, 22309, Alexandria, 22309, right here. It was 544,950. It went up to $660,000. It's 21.10% appreciation. Now, here is the key takeaway. Whether these percentages hold up over a full year or not, the directional message is clear. Fairfax appreciation is not uniform across all zips. Some are winning big, others are flat or down. You have to pick up the right micro market. So you have to pick up the right micro market. Now, here is the reality check. These numbers represent equity growth, not cash flow. If you are a buy and hold investor looking for monthly income, appreciation alone won't pay your mortgage. Appreciation alone won't pay your mortgage. But if you are building long-term wealth or planning to buy, rehab, rent, refinance, repeat. These are your target zip. So we just talked about appreciation. Now let's talk about the silent killer of cash flow. Let's talk about the silent killer of the cash flow, vacancy. You can buy the best property in Fairfax County, but if it sits vacant for 60 days, waiting for the tenant, you just lost 2 months of rent. At $3,000 a month, that's $6,000 out of pocket. This is where rental velocity matters. I analyzed all of the data for rental between January 7 and February 7, 2026. And right here, you can see all of the data unfiltered and unsorted. But I did sort only and filter only the closed data right here for Fairfax County. And I calculated median rental days on market by zip codes also. I am only going to show you zips where we have at least 10 closed leases. So this will give us a real picture of rental velocity. So right here, I created this summary for the top and for the lowest performing and for the top performing zips. Also, I didn't just create this sheet by median days on market. I created by the 75 percentile days on market. So I did it by median and 75th percentile also. And I have the sample size. So how many transactions happen? So how is this numbers are? So if I say right here, the top ones in Springfield, let's say in zip code 22153 in Springfield right here, and the median rent price was $2,795. My sample size was 13 transactions. The median, the 50% of the 13, it had 14 days on market. And the 75 percentile, if I'm going to calculate that one, is going to become 69 days. So this was the first one. The second one, Fairfax, zip code 22031, also the median is 17. The 75th percentile is 38. The sample size was 16. The third one is 22042 Falls Church. 17, the median. 38 is the 75th percentile with 11 sample size. Reston, 2190 zip code. 18 days the median, and 32 days the 75 percentile. The sample size is 18 transaction. And I have zip code 22033 in Fairfax, where the median was 20, the 75 44, and the sample was 29. So this is the top. You can see this is the top performing zip codes. Now the slower zip codes, where you can see zip code 22303 in Alexandria, the median is 52 days. The 75 is 92 days, and the sample size is 16. Falls Church, 22041, 52, the 75, 79, as the sample size 14, and so on. And I have 22041 right here. I said that 3 and 9 in Alexandria. So 220309 Alexandria. 52 days the median, and the 75 is 74. 14 the sample size. In fast zips, where rental days on market are under 30 days, I assume 1 month of vacancy per year. In slower zips, where days on market is 60 plus days, I budget for 2 to 3 months of vacancy annually. And if it's over 90 days, either avoid the zip code entirely or price in a 25% vacancy cushion. 25% vacancy cushion. Why does this matter? This is why I'm showing the 75 percentile matters, because it's showing you the realistic worst case scenario you need to underwrite for. I'm gonna give you an example for this zip code right here. I want to give you a case scenario for this one. And I created this calculator right here for zip code 22309 in Alexandria. Let's say the purchase price $660,000. The median rent is 3,400 a month. For example, the scenario one, the median performance, 50 days, 52 days vacant, plus 313 days occupied, is going to make it, the rent goes down to $2,900 a month. It's going to make you go down, losing 500 a month. It's equal to $6,000 a year. And I have the same scenario. So right here, if I'm going to put 74 days vacant, we end up 291 days occupied. This is lower our monthly rent to $2,700 a month. And it's also create loss. Just I was explaining why the vacancy, how many days vacancy is very important to count for. And this is why I show you the 50 percentile and the 75 percentile. This is why rental velocity is just as important as appreciation. Now, here is the reality. Fairfax County is not a high yield market. You are mostly in the 3 to 6% growth yield range. And after expenses, taxes, insurance, and vacancy, you are probably looking at 1 to 3% net cash on cash return, maybe break even or slightly negative in year one. But that's okay if you are buying for the right reason. If you are buying for the right reason, you are not buying Fairfax County to replace your W 2 income with rental cash flow. You are buying for number one, long-term appreciation, which we just saw can be 10 to 20% in the right zips. Two, mortgage pay down. Your tenant is buying you equity. Three, tax benefit, depreciation, interest deductions. Four, inflation hedge. Rents go up, your fixed mortgage doesn't. If you want 8 to 10% gross yield, you need to go to Richmond or Petersburg or out of the state. Fairfax is a wealth building market, not a cash flow market. Not a cash flow market. Okay, we just covered a lot of data. Let me give you a clear action plan based on whether you already own in Fairfax County or you are looking to buy. If you already own a property in Fairfax County, first, stress test it. Go to your zip code in this data, find three numbers. Current median price. Is your property above or below that median? If you are significantly below, let's say the median is $800,000, but your property is worth $650,000, that gap might be flexible. Maybe outdated kitchen, old flooring, need paints. A $30,000 to $50,000 cosmetic rehab could force your value up to $750,000 to $800,000. That's forced appreciation. You are creating equity through improvements, not waiting for the market. Number two, realistic rent comps. Don't guess. Look at the actual lease data. If you are renting for $2,800, but the median is $3,200, you are leaving $400 per month on the table. That's $4,800 a year. Three, vacancy risk. Check your zips rental days on the market. If it's over 60 days, budget for 2 to 3 months of vacancy per year, or get aggressive about tenant retention. Offer lease renewals, small upgrades, anything to avoid turnover. If you want to buy a rental in Fairfax County, don't buy the county. Buy 1 to 2 specific zips. Here is my filter process. Step 1, pick your strategy. Are you buying for appreciation or cash flow? If appreciation, focus on the zips with 10% plus year-over-year growth and low sales days and low days on the market and low sales days on market under 30 days. If cash flow, focus on gross yield above 5.5% and rental days on market under 30 days. Number two, demand three numbers before you write an offer. Demand three numbers before you write an offer. Every single time. Every single time. 1. Current rent comps. Pull the last 5 leases in that zip. 2. Realistic vacancy estimate. Realistic vacancy estimate. Use rental days on market data. 3. HOA or condo fees. This kill cash flow in Fairfax. Step 3. Run the numbers conservatively. Don't use 0% vacancy. Don't assume rents will go up 5% per year. Don't skip maintenance reserves. If the deal doesn't work with a 2 month vacancy cushion and a 5% expense buffer, don't do it. Don't do it. And here is the most important thing I can tell you. Fairfax County is not a set it and forget it market. This is an active investors market. You need to know your submarket. You need to monitor rent trends and you need to be ready to adjust. But if you do it right, if you pick the right zip, underwrite conservatively, and hold for 5 to 10 years, this is one of the best wealth building market in the county. If you want me to plug in your zip code into the same framework, let me know your number in the comments and I break it down for you. Thank you for watching. I am Azam, realtor in Virginia with Real Broker here in McLean, Virginia. Thank you again. See you in the next one.